Good morning. Finally, we have planned before 9:30, and it's also because of yesterday. Uh, we learned a lot of shit. Okay, so there's a slight change to the rule. Okay, so from now on, if there are three order blocks, regardless of their time frame, the first one has to be ignored. So here there's a 15 minutes order block here and a 1 hour order block here, and they're so close to each other, and because of that we are going to be ignoring this one. Okay, if it works, screw my life. Okay, uh, then we have this. The next order block is here, so it's quite far away, so we can take this trade. Okay, obviously the bias is still to the upside. uh, to the upside. USD JPY, we still do not have a clear trend. Okay, so no trade there. USD CAD, if we zoom out, it's still showing a bearish signs. Okay, so we have marked a 15 minutes order block here. Okay, this is the order block here, and it's right above the Tokyo high, and then we have previous day's high and an order block over here. Then we have gold, and gold is like it is bullish, but it is starting to show signs of going down. Okay, anyway, we wouldn't be able to trade this because the stop loss is very big for gold. So let's just observe this. Okay, uh, yeah, so the change of rule is that uh, even if there are three order blocks, with the first one being a 1 hour order block and the rest being 15-minute order blocks, then the first must be ignored. If there are three order blocks with the first one being a 15 minutes order block and the rest being 1 hour or 15 minutes order blocks, then the first one must be ignored. If there are three order blocks, the last two order blocks are equally valid. So these three are important points. Okay, and this is only if there are two order blocks. uh, when there are two order blocks, it's very obvious the first one has to be ignored. Okay, but when there are two order blocks and there's one 1 hour order block and below it there's a 15 minutes order block, in that situation we'll be taking the 1 hour. Okay, but then if there are three, then we'll have to ignore the first one because it's most likely to be a bait. Okay, so I've added that also here. So yeah, if there is a 15 minutes order block after a 1 hour order block, then both are equally valid. Actually, this is the rule. The 15 minutes is not invalid. It is valid, but we can take both trades, and that's why it says take risk. Okay, if the order blocks are far away, then they can be considered as valid order blocks. Here they're far away, so they're individually valid. GBPUSD, they are very close to each other, and this one should be invalid because uh, I don't know, man. Now it says now our rule is okay, but because we have three order blocks. Okay, we have this one. It's actually okay. That's not an order block. Screw our planning. Everything is going bad. I don't know. I'm very confused with order block selection. It's really hard when the markets are trending like this because they form multiple order blocks and they screw you. So this is not an order block. Okay, but this could be an order block because there's a fair value gap here and there's a black candle here, so this is the order block. So we'll have to consider these two as pairs. This one is the other order block. Okay, so I am considering this invalid. I'm not going to be using uh, this rule because there are now two order blocks, there are three order blocks. Okay, so uh, this is my order block of choice. And if this is going to work, screw my life, I'll have to change, I have to backtest again and see uh, which is actually better. But according to the backtest, uh, this is a much better approach. So let's see what happens. आंखें तेरी इतनी हंसी. Okay. Good afternoon. None of our pending orders got triggered. London gave a push before sweeping Asian low, and that's fine. Okay. The worst part was this is exactly what we marked in the morning. Okay, but when I went to TradingView, XNS, and then tried to place the order, just look at the amount of commissions, man. See, it's like some random commissions. Even with 1:2000 leverage, the commissions are around like almost half or more than half of the stop loss size. And if I win, I'll make 1000 rupees, and if I lose 700 rupees. That's almost like 1:1.2 risk to reward. So I did not take the trade, and then guess what? It exactly did what it should. Our entire week has been like this. All the trades that we thought wouldn't go, or all the trades that we thought, okay, they will go, and then don't end up taking. Basically, all the trades that I didn't take end up winning. All the trades I took, which is just a single trade, we lost. So right now luck is not on my side. Okay, but we don't trade until we get luck. We trade every day, and then when the luck is on our side, we get good money, and when luck is not on our side, we don't make money. That's all. Okay, so but because of this, and it's not just this instance. I looked at the average 1 hour candle, the average 15 minutes candle, and then checked the size of the candle, the pips. Okay, and then I found out that the average is around I don't remember the average, but then basically the commissions are almost double the usual commission. So in GBP/USD, the highest commissions I would be giving is 60 rupees. In EURUSD, it will be like around 50 rupees. USD JPY also around 50 to 60 rupees. But then in USD CAD, it's around 100 rupees. And in these situations, it's like 271 rupees. But it's also because the price action has been very choppy, and then the candles are very tiny, even in the 1 hour candle. So what I would do is remove USD CAD from our trading pair. Okay, and then instead we could still achieve our goal by increasing the risk we take in the other pair. So how I calculated that was, with 5 pairs we take around 276 trades, and out of, we don't care about the win rate. Okay, 276 trades with 5 pairs. So if we divide that by 4, we would get the exact amount of risk. We risk only 1%, so 276 into 1 divided by 4 would give us the amount of risk we would need to take with just 4 pairs, and that is around when you divide the number, you get around 69, and if you divide it by 5, which is how we are doing it now, it's only 55. So the amount of risk increased is 55 divided by 69, and that is 80%. So that means we need to increase our risk by 20%. So instead of risking 500 rupees, we need to risk 600 rupees. And obviously our rewards are also going to be like that. So we're going to make 2,200 instead of 1,000 rupees. So yeah, that's how we're going to be trading from now on. Let's remove USD CAD. We're letting go of this pair. Goodbye. Let's trade only these 4 pairs. But currently we're not trading gold as well because the stop loss is too big. The issue with gold is it's too big. With the issue with USD CAD is it's too small. So either way, we are in a very bad spot right now. Okay, we are in a not a trap, but then we are limiting ourselves because of this issue. Okay, so that's how it's going to go from now on. Let's see what happens. Good evening. This is the demo account. Okay, and I've been testing out this new strategy. Okay, it's a new strategy and a news strategy. Okay, so as you can see, this is not part of the news strategy. This is the news. This is news. This is news. This is news. So what we do is we take long positions in Euro USD and short in GBP USD or whichever, and then target 1:5 or 1:6 in huge events, huge news events, and 1:4 in or 1:3 in smaller events. So today it was a small event. It was a GDP quarterly event. So it was just 1:4 and it just hit our TP at 1:4 and reversed. Okay, and then we lost Euro USD. So that's the minus 493 and plus 2,600. I think it's a bit more than 1:4. I think because we have to place these orders at market. At market price. It's not a pending order. So this has been going well. So somehow we at least make 1:3 every trade. But if you remove the commissions, then we'll be making around 1:2.5, which is still good. Okay. This is fine. So this was the trade at 6 o'clock. The other trade which we planned, actually we placed a pending order here and we removed it because as per the rule, if there are 2 order blocks next to each other, then the first must be ignored. If there's a 15 minutes order block before a 1 hour order block, then 15 minutes must be ignored. So if you go here, there's a 15 minutes order block and then there's a 1 hour order block right below. So it's actually here. Okay, so that is why we have to ignore this 15 minutes order block. But the thing is, it looks like it is working and it has already gone 1:1.6 or 7. Okay, and then if it does go to 1:2, then there's something wrong with the rule. Okay, I don't think the rule that we have to ignore is right if it works, because it worked yesterday in GBP USD. Yesterday it worked, as you can see. Let me show you. Yeah, so if you see, this is the order block and then it tapped and then went up 1:4, but obviously it's a very small one. Okay, and the second order block worked as well. So maybe it's just some anomaly, or I can just ignore it. But if it keeps happening, then there's something wrong with the rule and we'll have to modify it in order to trade efficiently. As per our rule, finally our rule is playing out. Okay, we considered this order block invalid, and as you can see, there was a short reaction and then it went back down, and then it tapped our valid order block. Okay, it did not tap our 1 hour to 15 minute zone. It tapped our 1 hour order block, and it's going up. It actually broke even. We did not take the trade obviously because yeah, this is the stop loss required, minimum quantity. Maybe once we start taking 1.2%, we could take these kind of trades. But yeah, at least we could be happy that our rule worked. Yeah, that's pretty much it. Euro USD, yeah, it did not come to sweep Asian low. USD JPY did not come to sweep previous day's high. So there's no trade for today again. It's very, very hard to sit at the chart and do nothing about when everything is going as per the rule, as per strategy, everything is working, but you're not able to capture it because of some reason. Either it's commission, or either you're not there at home, or it's because of doubt with the order blocks or something. Something just keeps on, something just keeps happening, and somehow you just keep missing trades. Sometimes it's fear, sometimes it's the bad read of the markets, and all this is even more frustrating when you take a loss and you miss a lot of trades because of all these reasons. So I don't know, we still have one day left, tomorrow, and yeah, we have to work tomorrow and try to hit our weekly target, which is quite impossible. We need to take 2 wins to reach that target. Okay. um, Also, we're gonna be sticking to just trading, nothing else in regards to the YouTube videos. We're going to be only making trading videos and no other stuff. Maybe in the weekends I could do some vlogs or stuff, but then during the weekdays I don't want to deviate from trading at all, and that gives more screen time for trading. So I'm also going to be recording myself and recording the screen while or before I enter the trade, because I need to see how it works, or how my feelings are when I get into a trade, to get better at it or try to adjust certain things. So yeah, good night.